Hi, and welcome to my channel. For those of you new, my name is Dave. Now these videos are a mixing journey towards financial freedom, financial products, financial well-being, so you, like me, can reach your goals sometime in the future. Now it's not to boast or brag or say look at me, but to give people hope. If I can build a sizable portfolio, you can too. So this video is about my stocks and shares I set for the review of April 2025. Now, what's the aim of the portfolio? Well, we're looking for annual returns of 10%. We're looking for dividends of 2025 of £5,000, and we're looking for a year-end portfolio value of around about £153,000. So how have we done in the month? Well, we started at 134,760. We finished at 136,414. So a profit in the month of £1,654. We're up year to date 4.26%. So a very happy start when you think the S&P 500 struggled because what's happened to America with Donald Trump with his tariffs, and the FTSE 100 is up about 1% year to date. We'll have good months and bad ones, but we're not going to complain so far. Now in the month, contribution is somewhat restricted. We put £100 in, normally put £250, but we'll catch up later this year. Platform provider charges monthly fees of £17.22, which is based on percentage of our portfolio value. And where are we currently based? Well, UK, shall we say, 61%, USA and Americas, nearly 25%, and Asia and emerging markets, 11%. Now, during the month, we had some very good dividends, our best month so far. During the month, we received some nice dividends, a total of £608.56. We'll have good months and bad months for our best month year to date. So where do we get the dividends from? Well, Barclays gave us £90.80. We invested 36 new shares, so dividends next time will be a high payment. We received HSBC, £146.16, again reinvested 16 new shares. From NatWest, the banking group, we received £156.24, so again 31 new shares. And two of our funds gave us some dividends, what we call accumulation units, so we'll put back in the funds. Our China fund gave us £30.61, and our Fidelity World Index fund gave us £184.75. So year to date, we've made £673, well below expectations. We've got a yield across our shares of around about 5.79%. But dividends will be market increase in May because we've got some big banks paying out. We'll be back on track for the year to date. Now, if you like the videos, subscribe to the channel, smash the like button, and look at our blog post about other investment topics also. Now, let's dive into the portfolio. So where actually are our holdings held? So first of all, we'll do our shares. Our total shares are worth £67,000. Makes up 49% of our portfolio, of which 43% is in the FTSE 100 and 6% is in the FTSE 250. 10 shares, all in profit. So, our largest holding is Lloyds Banking Group, 20,163 shares, £14,500. Makes up 10% of our portfolio, and it will give us a nice dividend in May of around about 4-5% years. We own L&G, the insurance company, 5,158 shares, £12,000, 9% of our portfolio, but a yield of around about 9%. Will pay a very nice dividend in June. We own Aviva, again another insurance company. We own 1,898 shares, just over £10,500, 8% of our portfolio, again a nice yield around about 7%. Will pay a very nice dividend during the end of May. But everyone needs insurance, very cash rich, has good result lately, has been actually on the streamlining process. We own NatWest, the banking group, 1,261 shares, around about £6,000, 4% of the portfolio. The good news about NatWest, the government now own less than 2% of the stake, so the shackles are off, and that will hopefully be done very soon. But very good results in the trading month, probably the best out of all the banks, but very cash rich, good dividend, and it has done excellent results or excellent share price over the past 12 months. We own HSBC, 531 shares, £4,500, 3.5% of our portfolio, but it was done for diversification away from UK banks. But shall we say, very good results, very good share price run lately, and it does pay a quarter dividend. Now, away from the banks, we own AJ Bell, our platform provider. 983 shares, just over £4,000, but 3% of our volume. Assets under management increase, numbers of customers increase, the platforms increase. It's a growth company. It does pay a small yield, but it's what we call a long-term hold, but an expanding company. We own Card Factory, the retailer, 3,960 shares, nearly £4,000, 3% of the volume. Hopefully results will be out at the start of May. Very good trade statement. It is cash rich, so it has been on some kind of buying spree overseas, and it is, shall we say, one successful high street, but it struggled because of, shall we say, cost of living crisis, national insurance increase, minimum wage increase. Away from the banks, we own Phoenix Group, the pension provider. It's what we talk about in work. Owns the big companies, has bought providers in recently, shall we say, but nearly £4,000, 3% of our portfolio, but it has got a nice yield of nearly 10%, and that'll pay a nice dividend next month during June. Okay, but it's what we know about in work, it's what we speak to clients about, pension providers. And finally, our last holding is Sainsbury's, the retailer. 923 shares, £2,500, 2% of our portfolio. Is it some kind of price walk, shall we say, some kind of price match of Aldi, but results were out. Very good results, very cash rich, dividend increase. But everyone needs food, everyone needs to eat. But a nice collection of shares, predominantly based in financial services, what we know about, but we've got some nice dividends paid this month. We'll have some very nice dividends paid next month. But they're all shares we're going to keep for the foreseeable future. We see no reason to sell any of the shares. We're not going to top them up because they're UK based, but we bought them for a reason. Just switch off, and all the dividends will be invested back into the profits. Now let's look at the funds we hold within the portfolio. So at the moment, we own 51% of our portfolio in funds, nearly £70,000. 9 funds, 5 in profit, 4 showing a small loss. So where are the funds held? Well, our largest holding is a passive ventures fund done for our platform provider, nearly £24,000, 17% of our portfolio. It's given good returns, we just switch off. It was done for diversification, it covers all markets, but very low fees. We own a Fidelity World Index fund, £16,000, 12% of our portfolio. Owned around about 1,400 shares, so we say 0.12% fees. Did pay a dividend in April around about 1.5%, but the annual returns around about 10% for the last 5 years. We own an LNG technology fund, again £15,500, 12% of our portfolio. Has struggled lately because what's happened to Donald Trump and tariffs, but the last 2 years, the Magnificent Seven given great results. It owns about 250 shares, slightly higher fees of 0.3%, but we've done for a reason. Now some funds that have struggled recently. Fidelity China Fund, £2.5 grand, 2% of our portfolio. Emerging Market Fund, £1,250, 0.9% of our portfolio, and a second one, just over £1,200 of 0.9. Now they've struggled, we're going to, shall we say, reduce them in future, but we never seem to have a profit, but we're not going to sell at a loss. And finally, our funds, a Russia fund. We put £500 in, went to £6 plus. It struggled ever since because of Russia-Ukraine conflict. It's now worth £225, showing a great loss, but thankfully it makes up 0.16% of our portfolio. Who knows what happened with that fund moving forwards? But it did pay a dividend, shall we say, recently. Now, some money we ring fence for a specific purpose. We put £3,000 in an S&P 500 fund. It's now worth 3,167. Back in profit during the month, but it makes up 2.3% of our portfolio. And another fund we ring fence for was an FT All Share Index Fund. £5,000 we put in. It's now worth 5,443, but it makes up 4% of our portfolio. But we've done it for the reason. We didn't want to hold cash, we don't know if as well, but that's why we ring sender funds. And one fund we did top up during the month was the Fidelity World Index Fund. We've done that because we were UK based. So apart from, shall we say, our China emerging market funds and Russia funds, we see no reason to sell their funds or any other funds. We just switch off, it plays the market. So we've got a good mixture. We've got, shall we say, our shares giving us growth and individual dividends, and we've got our funds. We just switch off, does what it says in the tin, they track the market. But it just goes to show, if I can build a portfolio over 6 figures, you can too. if you invest on a regular basis, you think long term and invest in a pension wrapper or a tax-free wrapper and reinvest all dividends to accumulate on a much faster scale, shall we say. Remember, if you like the videos, smash the like button, subscribe to the channel, and we'll see you again at the next video.